You know, one thing which has happened in the last 1 year is that wealth effect. And that wealth effect has not been a substitute of what equity markets have done. It's been more about gold, silver, pretty much any commodity that you touched, you made money on that, and real estate as well. Do you think that money will find its way at some point throughout this year back into equity markets?
I don't know whether it will directly find, you took words out of my mouth. I don't know whether it will directly find its way into equity markets, but psychologically, it's a big thing, Aisha. If you just do the number, you know, we were estimating gold reserves in India, and even if I take silver as a rounding of error, $1.5 trillion in 2020. So that would be close to $4 or $5 trillion now, purely because of the prices. Look at market where 1.2 trillion, we are at close to $5 trillion market cap. And plus property. So all of this totals more than $10 trillion of wealth effect in India in the last 5 years on an economy size of $4.5 trillion. Maybe that is one reason, in spite of all the real big headwinds, right? Money is still coming into equity markets, and market is not as deeply impacted as the headlines are suggesting. आप headline तो देखो तो ऐसा लगता है कि क्या ही हो जाएगा, but nothing of that sort in that sense has happened in the market. Obviously, broad market, wherever the valuations were higher, broad markets has seen a lot of correction, but on a broad basis, equities have not been as damaged. And if I look at 5-year return, even pre-COVID till now, 5-year return is still very respectable in equities in India.
But that's because COVID was an anomaly. I mean, if you look at from that base, anything would be great.
But still, you know, from an investor perspective, a lot of the investors have joined from that. We had 2 crore people pre-COVID and we have 13 crore people now. So a lot of people have come in this phase. So we have to count that.
But will those people, Madhu, be patient? Because they could handle 2025, but could they handle muted returns for 2026 as well? That will really test their patience.
I am still quite hopeful because the equity has become as an asset class. Now, if you look at the numbers which we discussed on the overall wealth effect, and you put that in the context of 25,000-30,000 crore rupees of SIP, is still a very, very marginal number, very small number compared to the overall scheme of things, right? If the markets were doing really well and there are a momentum, these numbers could be, will be, not could be, much, much higher in years to come, right? Because over a longer period of time, we have seen gold and equities have really given a significantly larger compounding as compared with any other asset class in India. And if you look at the still overall saving of more than $1 trillion, only $50 billion still is coming in equity. So from the overall saving, still only 5% of saving is there. So I don't think, I'm not worried that this 12 months of muted return or negligible return will deter investors and SIPs will stop and you know, people will really take away money. I'm not in that camp.
So all through